Good morning. It's February 21st, and Ron and I are here. I'm from the warm south, and Ron's from the cold north. Ooh, bad.
47 degrees. So
I have a license agreement with Ron to utilize his materials. The agreement requires me to share this notice. I do have his written permission to utilize his products in this manner. And here's our standard disclaimer. Protects us as well as you. The information that's presented today is for educational and informational purposes only and is not advice. Everything we talk about is covered by this disclaimer. There will be no advice given by anyone, and you alone are responsible for how you evaluate and utilize the information that you learned today. And I'll tell you right now, I did not update this slide. We're not looking at trade alert results. We're doing the current vision status. We're going to look at the market forecast, and then we're going to look at pi and talk about how pi can be useful to you as a tool. Current version is K. It was updated August 3rd. Whenever Visions opens up, you'll get the banner. It says there was an update in January. That's actually for the yearly forecast. We're still on K, which was issued back in August. And if you have any problems with running Visions, first off, make sure you're on K. And then secondly, make sure that you've implemented the Windows 10 support notice. And that sets it up so that Visions runs in an administrative mode. And that's the configuration that you need. Still working on the online version, iVisions. Primarily focused on Trade Planner. Almost ready to roll that out. It's now working. And so the market forecast. Ron's going to take this part. Ron, it's up to you now, sir.
okay, here we go. As you remember, in early January, we said, okay, let's pick the factors. Interest rates down. So far, haven't moved. Unemployment rate up a little bit. Price of oil flat. Flat, I think, is, right now we're still on a flat state. No big changes. I mean, question is, with Iran, they get into a war with the U.S. could affect the price of oil on a short term, but long term, it's supply demand. The GDP growth rate, we said flat. U.S. dollar weaker. It's the second year of the presidential term. Consumer sentiment flat, and our Cedric chart A to B. So let's see how we're doing on for the year. Here was the forecast, 13 to 14%. So we're going, from the 60, about 6,900, said we'd get to 7,800. So still a very, very nice increase. So what's happened in the first 2 months, January, February? The market has had a tough time getting above 7,000 for the S&P 500. And look how it's been very choppy. And right now, today, we're right on forecast. The blue line is the forecast, suggesting a downturn in the forecast, at least, is showing, and then a big swing up. So is this Q1 results? Is that a factor that's going to cause the market to move up, get over that 7,000 number? I don't know. Surely not interest rates, so no big movement there. So maybe it is Q1 results that are going to move the market higher. So we'll have to wait and see. End of March, January, February, March, end of March, April, reports will come out. So
I guess that went too fast. Sorry.
And that's, if the general trend is good results, good, Q1 results, that'll move the market up. So if we
Yeah.
look at outlook, next 90 days, again, suggesting really no movement from where we're currently at. And then a slightly upturn there in April and May. So it's kind of basically verifying what we saw on the yearly forecast. We're going to have a movement up starting in April and May. And so outlook is showing the same thing. So that's where we are on the forecast and the actual. So any questions?
I know there's always changes of technology going. Before 20 years ago or more, it was the internet and the internet bubble. Now it's AI. I suppose it all comes out in the wash somewhere, but it does seem as though a lot of the movements are extreme because of all the sloshing around of sentiment about AI. And I wonder if there's a way to control for that or to, I don't know how you would do it. I think the changes in technology are going to be so profound that I don't even know what it's going to wind up, how it's going to wind up coming out in the numbers.
Yeah, you're probably right. And the thing is, what companies is AI impacting the most? And where is there opportunity? I mean, if you look at the whole sector of consumer goods, uh, you know, and food, that, AI maybe really can't do a lot in those areas, other than improve the production side. If you look at the automobile factories, there's a lot of AI that, can improve their production with robots and all of this stuff that, try and implement.
I think there's going to be a big rotation of companies. It's going to happen fast at this time of companies that either adopt or don't adopt. And if they don't adopt, they're going to find themselves pressured.
Yeah, be left behind, right?
Yeah, to
Too
survive. And I
late to
think it's going to be
absorb.
more profound than, when the internet was kind of coming on.
I mean, mostly now, since we made this move and all the things that I had to take care of, you get into all these customer service situations where it's AI that's trying to help you. And you say, wait a second, there are
Yeah,
no real humans here answering my questions.
yeah,
So, I mean, as you have a hard time getting to a real person, AI is blocking, is doing the customer service stuff in
yeah.
a lot of areas. And, it's cost reduction, but is it improving their end result? I don't know. I'm very disappointed sometimes in the answers I get.
I hate talking to a computer.
So,
Yeah, there's just going to be a big rotation. I think we're seeing a flat market because companies are, I think there's a lot of rotation out of effective competition and new rotation in is maybe a little bit slow. And I think it's actually panning out in how the market is averaging out. But when the average gets higher to the people that have actually adopted, but they'll be using AI to adopt to AI, to adapt to AI. And that is a kind of a bulge that we're a little bit behind right now.
All right.
take it away, Tommy.
All right. We'll get back and go to it.
Well, it's going to be interesting to see after what the Supreme Court did on Friday, how much that's going to affect the economy.
Yeah, yeah. What a mess.
All right. So the next portion is that everybody sees the title slide, Portfolio Income Explorer. I'm going to go through some slides, and if we want to do a demo, I can do that separately and make it live. But the Portfolio Income Explorer, Ron can probably do a better job than I am telling you as to why he did it. But but it was primarily a tool that was done to where you could take a portfolio, say your existing portfolio, put it in, and then it would show you the potential income that you could generate off of that portfolio. That's a key selling point for a lot of people's entry into selling covered calls. So you're holding on to stock and you say, hey, you can make a little bit of extra money while you're waiting to sell. All you got to do is sell calls. So Ron designed the Portfolio Income Explorer as a tool to help you with that. And you can get to it from the Visions Insight, which is from the homepage. You click on that, and then you'll see where it says Portfolio Income Explorer. And it'll open you into this entry screen where you've got to enter stock symbols and shares and everything. But there's a lot simpler and easier way to do it. And that is to go to the main page and input a list of tickers there. And then you'll see I've highlighted here the Run Pie button to it. Now, the way it currently, workflow wise, we're recommending that you follow this, and that is instead of just immediately running Pi from there, what you should do is run the call options. Use the call search engine to get your options. So by choosing the with the above list, it'll actually go out. The demo I've got today uses the Dow 30. And so the call option search engine will come up and it'll run through everything. One key thing here, you'll notice that about halfway down on the left-hand side, you'll underneath the select call option list here, you'll see a box that says show one symbol per tile. I unchecked that. If you don't uncheck it, you're going to end up with 30 windows of options that you have to close. But by unclicking that, you'll only get one at the end of the search. Once you close that, then you go back, you run Pi, and when you hit the Run Pi button, then you have a choice of either using local data or getting new option information. Since you just got the option information, what you should do is use local data. So choose the local data, run it with the local, and it will give you good results. So once you get the results, you get a list of information, and it's set on a default setting. And what I like to do is change that default setting to what you want to really be looking at. So by choosing the settings, more tools up in the top left-hand corner, you get this menu screen that shows up. And from there, I click on the set time to expiration. From the set time for expiration, you'll get a window here then. And I changed the equal weight dollar value to be $10,000 so that each position in the Dow 30 is based on that 10,000. I changed the days to option expiration to be 25. That's because I'm wanting to look at results close to 30 days. I don't want to go past 30 days. So I chose 25. That's a number less than the 30-day mark, and that should get me the next set of options that are tied to that. And I leave the desired stock appreciation at 0. So once you enter those, you press OK. Now you'll see we get different numbers. The monthly income is shown right there in the top green summary box. Total monthly income, $22,877. And that's generated off of the options that you see here. So that's selling the March 20th. That's the next monthly set of options with these strikes, which are pretty much at the money based strikes. If they're not right at the money, then they're the first strike that's out of the money. So you would end up with some capital gain that would take place if this was applied over 12 months. So the annual income, that number is not on the summary sheet. You have to add the capital gain to the monthly income. So the two numbers there in the lower right-hand corner is where you would need to do that. And then that'll give you the number that they were using there for the annual income. There's a top 10 number that menu that you can select. If you choose that, then you're looking at a different number. The monthly income changes to 14,000. And you can see that based upon that, about 63% of the monthly income out of the Dow 30 is generated by just the top 10. So if you've got a list of stocks, you're wanting to find out who are the ones that provide the best income generation off of it. You could put that into Pi, get the option data, say, show me the top 10, and it'll produce that for you. It's a good way to filter a large list into top producers of income. Now you think, well, you know what? You really make money by selling out of the money calls. A lot of people think that that's the way to do it. You'll get the stock appreciation and you'll get the income from the calls. Well, let's set it for a 5% appreciation. Again, you're going back to the settings, more tools option. Choose that 5% number and you run that and you see that the monthly income decreases quite a bit. And the annual income also decreases. So you're sitting there going, wait a minute, I make more money by selling at the money calls instead of trying to go out of the money. Oh, I just didn't set my target high enough. Let's go 10%. Well, so you go 10%. Well, the monthly income really gets low. Now you're only looking at like $3,000. And the annual income is still low. So it's
interesting.
It's interesting. Well, maybe we're just not ambitious enough. Let's go 15%. Well, now the monthly income's, barely over $1,000. I can still get a cup of coffee at Starbucks for that, but but I'm not going to be able to do, I'm not going to be able to live my lifestyle off of that. And my annual income now is 154,000. So that's all right. But you know what? That's still lower than the first scenario of just trying to sell calls. So what do we learn here? Income drops as you seek greater capital gains. And the way to do that is sell at the money calls. That's where you get the maximum monthly income. And there's other ways that we can use visions to prove that, but that's where the greatest time value is. And that's why selling at the money calls give you the maximum monthly income, because that's where the greatest time value is in the call premium. And you're going to have to achieve greater than a 15% capital return to overcome that drop in income that's taken place. So keep that in mind. And then use the top 10 feature to find your most productive stocks if you've got a list. And don't be surprised if you find that in a large list that you over more than half of that income comes from that smaller group of stocks. Okay. The end.
Good job.
And if that's real quick and dirty. If anybody wants me to run through it, I can do it for you. That's your choice.
If you wanted to run something like the Russell index, you just have to input all that manually, I guess.
You would have to input that because these are the preloaded ones.
Right.
The S&Ps, the Russell's not there. But once you bring in the Russell, then you could what you could do is then save that list,
Mm-hmm.
and then you'd have it as a pull down here that you could then just use over and over again. But to get the, to run this for the Dow, which is what I did,
Yeah.
you have that.
Well, those are all guaranteed to have options. Not all, a lot of stocks don't really have usable options.
True. And so then
Right, you see it, they've mostly have weekly, and now we're finding out that there now are options Monday, Wednesday, and Friday on a number of issues. So it's getting unreal of the, I'll call it the plan you can put together. You should call it laddering or taking advantage of opportunity 3 times a week. Come on, I mean, it's unreal. And there's volume. I mean, the one that Tommy and I have been using is Tesla. And if you look at that now, they have options Monday, Wednesday, and Friday. So it's unbelievable. And there's so much volume there. I mean, there's so much participation.
Yeah,
So there are a lot of computers trading those options.
that's right.
Yeah,
Which
so,
they can do.
so like here, Tesla, I mean, we're up to over 25 option chains being loaded. And your first one you've got is Monday, 23rd. And um,
Oh,
and it's still processing.
It's calculating the probability of assignment. Yeah, it's a
long
pretty big
list.
list. Pretty big
Long
list.
list.
Yeah.
It takes a while, but once you get that list, then it's in you've got a local file, and then like on the weekends, then things can be fairly simple by using the local data. And we're all sitting here looking at it going, when's it going to stop? Okay.
There it is.
There we go. So let's
How
see.
many millions of executions did we instructions to
So
build
let's
this
see. It
table?
said
Unreal.
current price was 411. So like Ron was talking about, you've got open interest here, in the, over 1,000 contracts.
Thousands, yeah.
And so the best fit calculations are, based upon the days, the durations that are in there. So you've got the best fit works. It works for the shorter time period. Okay. But like Ron said, there's the 25th, that's Wednesday. And then, there's Friday, the 27th. So and of course, then, like we said, once you've got your list, and of course, then you go out and get that, then it's simple to just run pi with that local data. And it takes a little bit of time here for it to run through the calcs and everything. And of course, then there's a summary, which I didn't show in the slides, but there's a summary which gives you the details that are there. And of course, it all starts off here with the default. This default setting is the 20,000 and at 21 days. So I'll just change that to 10,000. 25. And then again, it takes a little bit of time, and you might think it's not doing, but it'll come up, and then you've got it. So you can study through what each of these are. Then you also see how many shares it takes. So whereas most of them, a lot of the things in the Dow are over $100 a share. So yeah, $100 is just the minimum. So even though we say 10,000, you think 10,000 times 30 positions, you think, okay, my portfolio is only going to be 300,000. Well, no, it would take 838,000 to implement that kind of a strategy.
Right.
So, of course, you got to have 100 shares to be able to sell calls. But so yeah, most of these then are at the 100. Okay, top 10, and it automatically saves these for you. So like here's the list that we're working with right now, 1136. I was working with it this morning. I was working late last night on the presentation, but so it automatically saves those, and then to populate that, you've got to do the show income, and then it'll populate that again. So that's a quick and easy thing there.
Tommy, can you go back and show what you would do to input your again and show what you do to input the value of your portfolio and then use that as a starting point?
Well, that's the equal weight value. So it's right there. So I was saying I want my minimum position size to be targeting $10,000.
Okay.
So you don't set the portfolio value.
You set the equal weight value.
You set the equal weight value. And of course, the default's a different number, 20,000 in 21 days.
Okay.
And then that tells you what it would take. So it'd take $1 million to implement the default at 20,000.
Okay.
And still, you got a lot of positions that are still at just 100.
Yeah, that's right. That
You
100
can do-
shares per contract was set some time back ago, and then I don't know, probably 3-4 years ago, they went to factor the 100 into 10 shares. But that didn't last long. They abandoned it, and I don't know. I think the problem was they had a lot more customers trying to sell 10, 10 on 10 shares versus 100 shares, and it got too unwieldy. So basically it disappeared. It got, not supported anymore.
And weekly.
So we're back to the 100 shares per contract.
The other thing I'll point out here is you can do the same kind of analysis in Trade Planner. Okay. And you would, if you were to say, I want the next month, so choose next month and best fit for all. I can do this because we've already got local data. You can see here that the date timestamps are today from this morning. And so we've already got local data. So that's current. So all I have to do is go next month, say best fit for all. And that's going to choose those out of the money by one strike or at the money if it's available. So you could then compare it, and of course, then you've got to set up the shares correctly, okay? But if you put everything in plan, set all to yes, little button down here, sets them all to yes, and then we'll set this to just 100 shares.
And do an equal wage.
And now you hit the equal weight button and it'll equal weight them based on that, based upon that dollar amount. So, that dollar amount, but it's.
And then you can go in the money. There's a
Right.
checkbox for in the
Then
money.
you could go for check in the money.
Yeah.
But here, let's just take a look here before we go in the money. So we're looking at 23 point, 23, almost 24% return, right? So the call premium, $110,000, a 3% return if they were to expire. You go in the money and now you're looking at your return goes up some if they were to expire, but your call premium now 23,000, and then that's what the gain is, 17,000. See that? See, that's not the dollars. Yeah. Back to that. So yeah, you can do a similar kind of analysis in here. And of course, if you wanted to make it apples to apples, you'd have to go through and make the number of shares match what you saw in pie. But you can correlate all that. And of course, to make the funds to invest, here I was talking about those returns, but that was based on the funds to invest. To do the actual funds to invest, you got to click each one, which we were showing that the new iVisions trade planner automatically does this for you just by changing anything. So yeah, to do these 12 trades, you'd need over $500,000, almost 550,000, 2.91 return. So yeah, to get those correct return numbers, which I was saying earlier were wrong, because you got to change the funds to invest to equal how much money it was. But yeah, you can get there through Trade Planner if you don't want to try to use Pi, or you find Pi doesn't have enough flexibility to it. Okay.
Good job, Tommy.
Thanks,
Yeah.
Ron.
Good work.
All right. Any other questions?
Yeah, do you have an AI robot that can come do that for me?
I'll take him too.
Not
Little
yet.
practice, Bob.
Not yet, but I was talking to somebody who's not on the show today, and I said I was saying, in Pi Visions, I think what we'll do is we'll make a button for Pi, because and then we'll let the AI do it, just exactly like you're asking, Dwayne. I mean, we've already, and Ron and I've talked about what it would take for the AI to do that. And so, yeah, I think we'll get there. It's not the very next thing I'm working on, but we do envision that Monty will be able to do that for you.
Wow.
Okay.
Very good.
All right.
You.
All right then. Well, I hope everyone.
Happy testing.
Yeah.
Mark.
Thanks.
Hey, thank you.
Stay warm, stay dry, and in my case, you got to stay cool.
It'll only take me about a week to digest everything you said, but other than that, I'm doing fine.
That's good, Bob. Okay, that's just a fourth of the way to the next meal. Who knows what we're going to do next month? If you have any suggestions or tricks and things that you want us to cover, we'll be glad to do those things.
At the rate you're going, I'm going to have to fly to Florida and sit down and spend a day with you.
You know, I would welcome that. I've actually thought about trying to. I asked my wife. I said, "Hey, what do you think about doing another get together this time? You know, have everybody fly in, maybe on a Friday or something, or come in Thursday. We'd spend all day Friday. It's maybe Saturday morning, and then fly out Saturday afternoon. I mean, that'd be something people would be interested in? Bob, you could drive
The
over
answer,
to Gainesville.
the answer is absolutely yes.
Yeah, I know you would. Dale, what about you? Would that help you out?
What location would you do it in?
Well, I do it here at Orlando,
Okay.
or we'd
I-
have to go up to Baltimore to get Ron.
Right.
I don't know if we could coax Ron to flying back to Orlando, could we?
Probably.
Okay.
Florida's
That's a nice
really high
idea.
on Florida's high on my list, but Orlando
Right.
Yeah.
is,
I would definitely be interested if I can work it in with my social director's schedule.
Bring you notice who I consulted with first before you bring your social director with you, okay? And stay an extra day or two like Bob's going to do and go out to the Mickey Mouse world.
We tried to do that last year and we got skunked by the
Hurricane?
hurricane.
Yeah.
Mother Nature told you no.
I guess so, yeah.
Well, okay. I'll
Okay.
we'll give it some thought and we'll see what we can do for y'all, okay?
All
Okay,
right.
would love to.
Thanks,
Very
Tommy.
good.
Thanks,
All
Ron.
right. Thank you all and have a good month and we'll see you next time.
All right.
Thank you. Bye.
Thanks, Ron.
Thanks,
Thanks, Tommy.
Thanks much. Take care.
Appreciate it.
All right.